Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Prime Vision Network. Today on the Economy Show, we're going to talk, obviously it's going to be the first part about Russia-Ukraine. So how we're going to break it up is we're going to look at Russia-Ukraine and the impacts on the global economy, because every time we've had spikes like this in commodities, it usually leads very quickly to a recession. So we want to look at, where were we beforehand? Where are we now? Where are we going to be as this remains prolonged? And then when we look at leading indicators, we want to look at how is another spike in inflation going to hit consumers? Because if you remember, our view last year, the end of last year, was that January and February was going to see some moderating inflation. Then we were going to start to see an increase in March through June. Clearly, January was wrong. With everything that's happened now, February is going to be wrong. So when you look at where inflation is, it didn't moderate. It continued to go higher. So what is inflation going to look like, and how is that going to impact the way the consumer is, and what's going to be the reaction from the Fed? And I think those are going to be the things, because they're supposed to start raising rates this month. Then we're going to go to regional Fed data and how was that mixed, and then where are some of the prices going up? And then we're going to look at Europe and look at inflation setting up for another spike. Again, something similar, not too surprising. And then when we look at China, we want to look at some of the data that's improved, but then on the other side, how the consumer remains a bit weak. And we want to talk about, is there a way to go from one to the other where, maybe this is the beginning of things getting a bit better and then the consumer will start to pick back up, or how that disconnect can continue to be in the system. So now when we turn to what is happening in the global market, we want to look at liquidity, because if you remember, obviously, who doesn't, the fact, through 2020 into 2021, everybody had low rates, there was monetary easing, there was fiscal easing. Well, now we're on the other side of that. And when you look at where things are in terms of the liquidity indicator, you're seeing that liquidity is now negative, which means that as a whole, as an aggregate, you're getting liquidity coming out of the market, not being pushed into the market. And this is happening without the U.S. even raising a rate yet. So you're starting to see, where are we past the point of peak earnings? Are we going to start to see some of those earnings come back? So the reopening 2.0, you had strong labor demand, household with money on the sidelines that has come back into the market, and now as inflation continues to ramp up, will continue to be pulled into the market. But there was some of these expectations that we could get a slowdown and even a potential recession. Now, mind you, a recession, technically speaking, are 2 consecutive quarters of negative growth. So the view was that was going to happen in 2023. But when you look at where prices are, is that something that's going to be pulled forward? And that's what we want to look at as we evolve what comes out of Russia, Ukraine. Why would that be the case as things continue to develop in that region? So I thought this was a great chart looking at what happens where the surge in energy prices suggests a high probability of a recession. And you can see that every time we've gotten these huge spikes at this level, you see that there is a recession that either happens instantaneously or happens very soon after. And we're coming to a very concerning point. Now, given this is just energy, so obviously energy typically leads with increases in other areas, but we're also seeing not only an energy side, but a food side. And that's where this gets even more complicated and more dangerous when you start to look at some of these concerns and what's going to happen going forward. Now, China's always obviously been a very big point of what we've talked about. So when you look at China's largest state-owned banks are advising state-owned enterprises against buying Russian coal. Now, we've talked about oil, we've talked about natural gas, we've talked about grain. We haven't spoken that much about coal. Now, according to right now, Russia's largest coal export market, and China is Russia's largest coal export market, and Russia is China's second largest import source, accounting for 15% of imports last year, behind Indonesia. But they still have the ban on Australia. So now you not only have an energy, this is just looking at where these broad energy strokes looks at and these problems. So bank financing potentially on the line. Chinese coal-fired power plants and steel mills have begun to find alternatives or cut back foreign coal purchases altogether. Russian coal simply isn't worth major price or supply risk right now. So when you start looking at where things are going, how this is going to impact, this is just another wrinkle in a pronged attack and shortfalls that are going to continue to hit the market. So when you think about also trade exposure, what is the trade exposure? Where are trade exposures when you look at Russia, Ukraine? So when we look at exports, what are the exports going to Russia? Fairly low. Imports obviously much higher, given where things are coming from on an energy side. But then into the European Union, they're massive. And this is why in the segment 4, we're going to talk more about where those risks are, how that continues to play out, and what those concerns will be when you look at what happens when you take these products away and increase, obviously, that inflationary pressure. Now looking at what has changed and what has happened on the front, given we're filming this on March 2nd, so there will likely be a lot of changes in between. When you look at where things are, there's been little change in terms of some of the different stances on, especially when you look at the West and the North. Right now, you've seen that they've continued to try to take Kyiv. They have not been able to. They continue to surround it. When you look at the forces that are coming in, trying to isolate them and cut off access to the West, because that's where you have a lot of additional equipment coming through. So right now, what we have are forces, Russian forces are engaging in 4 primary efforts. When you look at the main effort, obviously being Kyiv, a supporting effort is Kharkiv, which is essentially a big staging ground that they're looking to use. It has gone back and forth with who controls it. Right now, as of this recording, it has fallen under Russian control. Then when you look at supporting efforts in terms of Mariupol, that is another one that continues to go back and forth. They're being hit by multiple angles, but it's very important for Russia to essentially close this off, create that land bridge, and essentially shut off the Sea of Azov to the Ukrainians. And then you have the Kherson and West. So when you look at Odessa, when you look at what is happening in the current region where there's been a multi-pronged attack into Mykolaiv, those are some key areas when you look at trying to connect and move over and take away the Black Sea. So far, they have been unable to do so, but they continue to make strides. So I know that there's a lot of, you can find the Russian view, you can find the Ukrainian view, but we try to be realistic. When you look at what is happening from the north, the Ukrainians have been able to stand their ground. When you look at what's happening from the south, the Russians have been making advancements. But there's a mixture of how are those advancements being done. When you look at the Ukraine, it's a fairly large country. You have the ability to have tactical retreats. So you take a stand, you create impacts, and then you retreat to a new fortified position. So essentially, you're giving up distance for time. So you're pulling the Russians in. You're trying to again stretch their supply lines. We all know that they're having supply issues on multiple levels, in everything from food to clothing to fuel. So, and then draw them into very large buildings and urban surroundings. Because when you think about Mosul, when you think about, the last time we had a very large a combat in an urban setting, when you look at Mosul and ISIS in general, most of those buildings were 3 to 5, 7 stories high. When you're in Ukraine, and some of these buildings are 30, 40, 50 stories high. I mean, you're looking at 850 units that have to be cleared. I mean, that's almost a full battalion, and typically the ratio normally is 5 attackers to 1 defender. So when you start looking at it, and then obviously you have to leave a large percentage of the battalion to maintain ownership of that building, to make sure that nobody sneaks behind you. And again, this is why urban warfare is so difficult. But this gives you an idea of we're far from over. There's a lot that remains at stake. You've had Russia increasing their attacks from the air in terms of not only just artillery, but also sorties. Russia still doesn't fully control the skies, so that's enabling some counter attacks and some obviously dogfights. But these are the reason why we go through this is not to tell you I know so much about military strategy, but just showing you that this isn't ending now. This isn't ending tomorrow. This isn't ending a month from now. So the issues that we speak of in terms of the commodities and the impacts on a broader level are going to continue to be severe, especially because Ukraine was considered the breadbasket of Russia and the breadbasket of Europe. So you're seeing a lot of impacts that are going to reverberate out from just this local region. And here's just a good estimate of what are some of those impacts. So estimated impact of Ukraine crisis on global economic growth. Here's where you're getting an idea. Obviously, Russia's getting hit. But then when you look at what are some of the impacts, Eurozone, almost a full percent in some instances. And then when you look at the UK and US, about anywhere from 25 basis points to 50 basis points, depending on the underlying exposures. And it could easily get worse, because what happens with inflation? What happens with shortfalls? What happens when emerging markets that were already struggling to maintain their subsidies at 95 are now staring at 112, 118? These become bigger issues. So the invasion of Ukraine expected to hit Russian economy harder than Eurozone and others, but deterioration in GDP still expected everywhere nonetheless. So then when you look at the Black and Azov seaports, you see the grain shipments from Ukraine. And this is why some of these areas are so important, and why the access essentially, because even if Ukraine takes complete control, are they planting crops? Are they harvesting crops? Are they putting fertilizer down? When you're looking at this and your home country is being attacked, how active are those farmers going to be in planting food, or are they on the front lines fighting? Again, all of these things are just. It takes time for plants to grow. Like we can't skip biology. So if we miss this planting season, well, that means that next year is going to be a problem again. So again, this is a reverberating issue and not something that clears away quickly. So then putting that in perspective, looking at Russia and Ukraine, what do they account for? So when you look at for a quarter of global grains trade, so when you look at Russia and Ukraine, 102 million tons. So and now we've already talked about the fact that there's been droughts in Brazil and Argentina. Those numbers have come down. So this is a bigger issue. Now we have fertilizer shortages. China's saying that they're going to ban exports again of fertilizers to make sure it's local. Russia was an exporter of fertilizer. So when you have these costs going up, do people and farmers adjust what they're growing, change the yields, not use as much fertilizer, which will inherently draw down yields in total? Again, all of these knock-on effects on why this isn't going to be cleared up very quickly. So when we look at where things are right now, so bank exposures. So now not only are we talking about these different pieces, but we also have the bank exposure to Russia. When you look at it, France has about 23 billion, Italy about the same, Austria. So there's not a huge amount. It's still something, but again, there's been a lot of hindrance to investing in Russia for multiple years, not just today. So on the banking side, there's not too much of an issue, but what are the letters of credit or the debt or some of the other issues that remain that may have their exposure because they have a certain amount of exposure to refiners and other areas that have to be looked at in terms of what is their full exposure across other areas and other corporate investments. So then when you look at the geographic distribution of Russia reserve assets, so Russia doesn't obviously keep everything in-house. No central bank does. It's spread throughout to make sure that it's easier to do business in the country. You're going to be able to do transfers. You're going to be able to do the exchange rate. So Russia's central bank holds most of its reserves overseas, 7% in the U.S. Maybe the country's loss of access to everything save for gold and Chinese yuan holdings, leaving the country with only 230 billion per June 2021 data. So a look at the geographical distribution. Russia's exposure to economic and financial pressure by developed markets is significant. So when you look at where the assets are, you have essentially most of this has been frozen, and without the ability of pulling it back from the U.S., from France, from others back into Russia. Now, some of this could have moved. This is obviously from June. There could have been some preliminary moves ahead of an attack and ahead of an invasion, because they knew that, again, I can guarantee you they're not surprised by sanctions. So I would assume that the exposures probably aren't as big as this, but it gives you an idea of what they're faced with and what the issues could be at home. So now when you take that and you look at the year-to-date gain in gas prices, would act as a roughly $75 billion energy tax on consumers. So this is just looking at gasoline prices. This isn't looking at natural gas prices. This isn't looking at food. This is purely looking at gasoline prices. And you get an idea that that's a $75 billion hit, which is just another knock-on effect, which again is going to impact how the consumer reacts, what spending looks like, and where this economy can really function. So global supply demand, based on what Longview is saying, it's fairly balanced. It's going to be it's difficult to say where are things difficult. Where are some of these shifts? Is it going to be balanced? There's a lot of unknowns, but this is just looking at one specific estimate for where things are. So then when you look at Iranian oil production, could we see additional flow? Could we see additional movements that would increase some of this volume, which is something that we talked about in the EIA show, which the short answer is yes. You could see some of this movement because there is a natural transition from Urals into Iranian light. But they also know this, and they're going to try to get what they can in order to get a new deal. Now, when you take this from a Russian natural gas exports perspective, here's where you look at Germany. This is, again, Germany is obviously a massive exporting nation, and it's something that becomes very problematic when you look at, their prices are going to go up. As their prices go up, what does that do to goods? What does that do to cost? And that becomes another level of pressure. So then when you look at three countries provide almost 70% of liquefied natural gas received in Europe, it's Russia as well. Yamal is a huge exporter, not just piped gas, but also Russia. So not only do you have to replace Russian piped gas, you also have to replace Russian liquefied gas. So it just continues to compound on the problems that Europe faces and the issues that we're going to see on economic growth, on where prices are, and what the damage is going to be to the consumer. I am by no means saying that these damages aren't worth taking. I am not making a political comment. I am not saying that what is happening with Russia, Ukraine. I'm just looking at the data and explaining what are the problems that could arise from all of these things as they continue to unfold between Russia and Ukraine. Russia and Ukraine non-energy commodities, as you can see from wheat, in totals, you're talking about global exports over 25%, palladium 23%, corn 15%, platinum 15%, aluminum 10%. Again, all of these issues are going to hit multiple areas and supply chains, and it's only going to keep getting worse as the U.S. continues to ratchet up Russian sanctions on not only individuals but also corporations, which is why they're going to have trouble doing additional business, not only in the U.S. but elsewhere, as we remove their ability to access U.S. banks, and nothing they do can touch a U.S. bank. And so you're not surprised when I say this, a lot of things touch U.S. banks. So then when you look ahead to the next 2 years, you get an idea of where the risk on the global growth is. And now, mind you, this was struck prior to the invasion. So it's important to say that risk slightly to the downside was already in play. And now how much is this going to increase based on what has happened at this moment in time? And now emerging market imports are surprising to the upside, but how much is that going to lead to export prices going up because they try to pass on this cost? And as the U.S. is a massive importer of goods, what is that going to do to our prices, to our inflation, and why we continue to see these inflationary pressures ripping higher? And now when we look at where things are in terms of why are we at this juncture, you get an idea of COVID has caused the biggest poverty reversal in 3 decades. And I think this is a piece that can't be lost in terms of why are we in this problem, which is why last year in March of 2021, we talked about what happens post-COVID. And this was a huge piece of what we spoke about on why we're seeing these pressures. We did several shows on it in 2020 on why this was going to be the case. And again, here we are with additional pressure and geopolitical risk rising. So now in the next segment, we're going to go deeper into the US and what are some of the things that are happening as a leading indicator, as well as what is impacting the underlying consumer.